Welcome back to another P2P Lending portfolio update, where I will share with you the changes in my portfolio over the past month. As always, this is no investment advice. P2P Lending is risky, and while the risk varies on every platform, there is always the possibility of losing money. In the right column, you can see how the portfolio has changed over the last month. I redeployed uninvested funds on PeerBerry and reinvested the interest payment. I also reinvested the funds on Fintown. New investments have been made on LANDE and Triple Dragon Funding, a new platform in the portfolio. The largest share of the portfolio is allocated on PeerBerry, which continues to perform as expected. The loans and interest are paid on time. Recently, the platform also launched a secondary market to provide liquidity for investors. This feature was put on hold shortly after launch as PeerBerry needed to adjust certain terms. To my knowledge, the secondary market will be available again next week. As of the time of recording, most of the portfolio is allocated to loans in Poland, the Philippines, and South Africa. The majority of the loans are backed by the Aventus Group guarantee, which we discussed in more detail with Aventus CEO last month. If you are a serious investor with a larger exposure on PeerBerry, I recommend watching the full interview on P2P Empire. There has been no change in my portfolio on EstateGuru. In January, the platform did not recover any loans from my portfolio. When we talk about recoveries, we really mean significant write-offs. Over the past 2 months, EstateGuru has recovered only partial amounts on the loans, resulting in over 800k euro in losses on the outstanding principal. Should there be more write-offs in the future, I will deduct them from my monthly income report. On Fintown, I reinvested my interest in a recently offered lot for the rental project Rigeni. Those lots are here to refinance some of the investors who may exited their position into this rental deal. In addition, the platform offers investments in the seed development project in Costa Rica with quarterly interest payments or repayments at the end of the long term. This year, the developer should begin pre-sales for the units, so it will be interesting to see how strong the demand is for ownership in the resort. There is little to report on Crowdpear. Only 1.8% of my loan portfolio on this platform is in default. The rest continues to perform as expected. If you are looking for a moderate yield on secured loans on a regulated platform, they offer plenty of options at the moment. That said, my preferred investment on Crowdpear is limited to B-rated projects, which are not always available. My stake on LANDE has also increased. Currently, 4.8% of my portfolio is in default and 16% is delayed. Some of you may wonder how the Mercosur deal will impact the portfolio on LANDE. We will cover this in more detail in the next week's news update. So if you don't want to miss that, make sure to subscribe and hit the notification bell. Moving on to Indemo, where the recovery steps have been updated for several of the debts in which I invested. There has been no full recovery during January, which is expected, as it can take on average 2 years to fully recover a discounted debt. Indemo has extended its winter cashback bonus for another month, offering investors who increase their stake on the platform up to 5% instant bonus. According to my knowledge, the secondary market should be launched by the end of this month, so expect the bonuses to decrease after that, as the goal was to compensate investors for the lack of liquidity. There is not much to report about my investment on income. The one loan in which I am invested performs as expected. The same goes for Afranga. All the interest is paid on time. Additionally, investors can currently secure very attractive rates on stick credit loans, which is a reputable Bulgarian lender with an excellent track record in honoring investors' obligations. My outstanding portfolio on Nectaro decreased over the past few days as I have stopped my auto invest. Currently, I'm re-evaluating my position on this platform. Some competing platforms offer greater transparency and are willing to share more details with me than Nectaro, which I also consider in my risk analysis. Additionally, I can also earn a 14% interest on Triple Dragon Funding, which is a newly launched platform from an established lending company based in the UK. I've been researching the company since December, and we also had an insightful discussion with the founder and CEO not long ago, explaining the business model and the associated risks. On TDFunding, you are investing in business loans secured by tax credits or receivables, which is something I covered in more detail in our Triple Dragon Funding review on P2P Empire. For a quick overview, you can also watch this video right here to determine whether this platform is a good fit for your own portfolio. Currently, I've been investing on the platform for a few weeks and everything seems to work as expected. The sign-up process and the deposits of funds is quick. There are plenty of investment opportunities available and you can opt in to reinvest your daily interest, which limits the cash drag issue, which is something investors can face on other platforms. If you're looking for frequent interest payouts, TDFunding is certainly worth looking into. It's just February, however, it's already pretty clear to me that this P2P lending portfolio will change this year. My plan is to get rid of EstateGuru, which is unfortunately out of my control. Additionally, I will likely increase the minimum investment amounts on selected platforms that offer, in my view, the best risk-adjusted returns. This means that I may exit some platforms to improve this metric. At the end of January, my portfolio value stood at €129,969, representing an increase of 5.17% compared to the previous month. The portfolio generated €962 last month, which is an increase of 42%. Most of my funds are allocated to PeerBerry and Fintown, followed by Afranga, Indemo and LANDE. Around 5.3% of the portfolio is not performing, while the rest continues to generate interest. The portfolio remains diversified across several countries, mainly Poland, Lithuania, the Czech Republic, Spain and Bulgaria. Most of my loans are longer term, such as commercial, real estate and agricultural loans. The share of rental projects and discounted debts is about 16% and 10% respectively. About 34% of my portfolio is secured by collateral, while the remaining 66% consists of unsecured loans backed by company assets or buyback guarantees. What's worth noting is that most investments in markets with elevated geopolitical or country risks are backed by proven group guarantees. My weighted average interest rate increased to 11.61% with an average investment size of €588 spread across 221 loans in 16 countries. To review the internal return rate for each platform, please visit our portfolio page on P2P Empire. For additional information, you can also access the semi-raw data on buymeacoffee.com, which is available to our members. That's it for this month's update. If you found this video valuable, hit the like button. Thanks for watching and I'll catch you in the next one.